Okay, so good morning, everyone. Welcome to today's macro snapshot. We are Wednesday, December the 20th. So obviously we're going into the holiday period. Yesterday, for example, we had only about 50% of normal volume for the ES contract. So the point is that liquidity is drying up, and therefore maybe we're not going to see too many sort of fireworks. We'll just continue to see grinding kind of price action. What do we have today in terms of yesterday? We had some pretty strong home sales, which got the market's attention, showing that the economy still seems to be doing relatively well. That was driven by new home, single unit, single family kind of home units. Today, the thing which could get the market's attention is the Conference Board consumer sort of confidence, present situations, expectations, as you can see here. I mean, this is a tier 2 data point, but in a low liquidity situation where the market is very, very focused on economic data, that could cause, a few ticks up and down. So that's something to be looking out for at 10 o'clock. Apart from that, I'd say the main news overnight, there was a much lower than expected CPI print coming out of the UK. And basically what we saw is that if we just look over the bond space here, let's just quickly find the UK bonds here. Whoops, here we go here. You can see here that the UK the gilt, the 10-year had a pretty strong rally upwards, basically based on this idea that the Bank of England would maybe not be sort of hiking would be cutting a little more quickly and more aggressively. So basically dovish news and sort of supporting this idea that maybe not only the UK but also the Eurozone in general. Sort of slightly dovish sort of CPI print there. So on the back of that, we also saw the where's the German bonds here? If I can find them, we can see the Bund having a nice sort of green candle up, and also the US bonds also having a little bit of a sort of finally a bit of a bull sort of steepen. We see here the front end in the US going up a little bit. We also see the 5s all the way out to the 10s and the 30s. So just a tiny little bit of sort of bull steepening there. If we just have to look at the curve here, we can have a look at, let's say, the 2s, 30s. You can see that that's still within this sort of bull flag kind of zone here. So just sort of pushing up back into the middle of that. So who knows, maybe the most sort of hawkish rhetoric of the Fed is sort of starting to fade a little bit. And talking about that, we had a few FOMC members yesterday, Goolsbee, who else? I think Bostic. Just they continued to push back a little bit about the market, and both Goolsbee and Bostic were saying they didn't quite understand why the market was being so sort of optimistic about early rate cuts, so aggressive about early rate cuts. On the other hand, one of them did say that the progress on inflation had been remarkable. So the point is, I think the market is just saying, okay, guys, we understand that the FOMC is going to push back, but we will simply react to the data. So I think the main thing here is, I'm not going to say to ignore Fed speak, but I think really the market will react on the data. It's as simple as that. But talking about the FOMC, we do have Goolsbee again today. I think that's his third speech in as many days. We know where he stands now. We also have Pat Harker as well. So we have a couple more Fed speakers. Over in the ECB, we have a couple of speakers as well. But as I say, we are getting towards the Christmas holiday sort of period. So not sure how much price action we'll get. But at the moment, just looking at a couple of other things, we can see that the equities continue to grind up. VIX remains, pretty much along its lows, here around about 12 or so. So no particular problems there. We see on the cash SPX index that's getting close towards the recent, the highs from the beginning of 2022, end of 2021. So maybe a little more to go there, another % or two. We see that the ES contract, the front contract, has basically breached that high. We see NASDAQ is above that. We see also that the Russell has been, performing pretty well, outperforming, breaking through sort of a quadruple top here, so to speak. So the Russell has a lot more to go. And as obviously that's been underperforming all year, but now starting to, in a sense, outperform the small caps are outperforming. So equities continue to grind up. I mean, really, the big story is, that could continue for another few days. And just by the way, the period after Christmas until the new year, I was just reading some statistical analysis that there's some crazy number which essentially says that Almost always, I forget, but in like 93% of occasions that goes up between Christmas and New Year. So the Santa rally is really sort of an end of year rally. So for those of you who love this seasonality statistics, there's no reason why the equities can't grind up a little bit more. Talking about equities, we did have a slightly sort of soft earnings report from FedEx reported yesterday. Their shares are about 10%, basically saying that they think the peak holiday season sort of is over for sort of last year. So, FedEx a little bit of a dampener. But there's no reason why equities can't crawl a little bit higher just at the moment. I think really, next year where we have more liquidity and we start to get some more important sort of economic data points, that might be a bit of a turn in that story, or maybe not. But at the moment, grinding higher. We see European equities doing, trading along the sort of the highs. One of the big winners yesterday in terms of the equities was the Nikkei out of Japan. You see it gapped up, was up about 1.4%. There's the Nikkei 225. That's just on the back of the fact that Ueda from the Bank of Japan was relatively dovish, and the market interpreted that way. So anytime the yen kind of weakens, that's a bit of a sort of a dovish support for the Japanese equities. So they're looking pretty good here. And as you can see, obviously at a pretty key level, if they do want to break out, I mean, there's a lot of topside basically. So interesting to see what happens with the Nikkei here, because they are trading around as kind of like a quintuple top or so. But anyway, global equity is doing pretty well. We also see emerging market, excluding China, doing very well on the back of dovishness from especially from the Fed. That big gap up was last Wednesday. So generally, I think the equities enjoying the broad sort of sense that inflation is stable or coming down, and that global central banks, despite some rhetoric and some pushback, is at the end of the day, not we've passed peak hawkishness. Let's put it that way. So global equities sort of fairly happy. And as I say, that's being more or less reflected in the bond markets. The bond markets are also doing quite well. If we look at, let's say, just a quick look at some of the yields here. Let's look at, let's say, like the 10-year yield in Germany. See, that's come down a lot. We see the front end of the German curve, also coming down. And in the US, as we know, yields are, generally sort of, trading towards the lows. I mean, there's some fluctuations day to day with data and sort of Fed rhetoric, and the curve sometimes is flattening, sometimes is steepening. But the broad direction of travel is for, global central banks, to have passed the hiking cycle, and at least to be, if not on hold, maybe even, slowly moving towards a cutting cycle. And generally that's being held as sort of a risk-on kind of situation. And obviously that's putting downward pressure on the US dollar. The US dollar continues to trade, sort of fairly low at this point. Some of the other currencies having a nice sort of bounce. We see the Aussie up doing well. We see New Zealand up. We see CAD up. Now talking about CAD as well, that's also maybe on the back of sort of slightly stronger oil prices. What we are seeing is that oil, we continue to have sort of comments coming out of the Houthi, the rebels, in the Red Sea area, going up in towards the Suez Canal. So the point is here that a lot of the shipping companies are doing well. There's increased insurance premiums, and therefore increased shipping premiums. So really the big companies, like, you've got like Maersk and companies like this, their stock price has gone up well. Now, how that's really going to affect oil is kind of an interesting one. Just because, a lot of people, we had, for example, a build yesterday in the API yesterday afternoon, had a bit of a build. So today we have data from the EIA, from the American Department of Energy. So let's see if those builds are confirmed. At this point here, like the price action is looking quite bullish. I mean, I would say I'll put it on the CL1 contract, the front contract here, and you can see that the initial fib, this is sort of fib here, the 61.8% at about 75, what is it, $75. That is now the testing that. The earlier rejection from the downtrend, that was actually bought on this short-term fib, this kind of purple one here. So at this point, I would say the bulls are passing the tests. They are jumping over the hurdles which the market is putting in front of them. So at this point, you have to say the price action is bullish. I think the final, pretty important, there's two tests here, is this downtrend, breaking out of this down channel, which we technically are sort of doing. Let's have a look at the January contract. We're already out of there. On the the February contract here, we have to get past this fib retracement. But I think, if we get past this, then you could say that there's definitely maybe a little bit more upside. But then the question you have to say, well, okay, is this simply a little bit of risk premium being built in by the sort of the tax in the Red Sea and this idea that that supply might be disrupted? It's possible. So is this the fundamental story? So what I want to quickly have a look at, guys, are just a couple of like the time spreads and whatnot. So if we go and look at that, which I will do when I can find it. So if we just first of all look at a spread here, this is the February-March spread, obviously the volume picking up. You can see that that had been going into a contango structure, so less than zero. So I'm just going to put that on. I don't know, let's say like maybe a 30-minute chart, like zoom in a little bit here. And you can see that just over the last, what is this, 2 or 3 days that we had been you know, a little bit negative here. It's now still negative, but definitely starting to push up. So the time spread's being a little more supportive. I'm going to say a little more supportive. And if we also look at, let's say, the curve here, you can see that the green line here is from 1 week ago, and obviously the outright prices have gone up, you know, quite a lot, you know, $4 or $5 or so. But also the shape of the curve, it's still in a contango structure in general, but I would say a less steep contango structure. So this curve, you know, over the last week compared to, as I say here, a week ago in the green, is pushing up a little bit. It's becoming less in contango. So there are some small green shoots of positivity in the oil market. Let's see what happens today. But again, this is a lot of this is also being in the Brent, because obviously what's happening in the Red Sea is more of a Brent and Dubai kind of grade sort of story rather than WTI story. So WTI, which we're looking at here in the US, is a little less supportive. The situation is a little more positive over in the Brent and the Dubai market. So oil looking, you know, a little positive. I think who knows? The real question here is that, is this just a short-term sort of risk premium bump, which will be sort of faded, you know, as the Americans, the Americans are already talking about doing a task force in the Red Sea, and now also over the last sort of 12 hours or so, they're talking about, you know, maybe directly attacking some of the Houthi bases. So I'm not sure that this sort of piracy or threat to shipping in the Red Sea is going to be an ongoing story. I think we may see that subside relatively soon, maybe not in the next day or two, but maybe in the next week or two. And then we'll get back to fundamentals, going to get back to inventories and sort of the outlook for global growth. So that's something to look out for. So that's about it today, guys. You know, as I say, personally, I'm looking at the bonds a little bit. We have a little bit of Fed speak. As I say, we have Goolsbee and Harker, but Goolsbee's already spoken twice. So I don't expect huge moves. Not a lot of other information coming out. We have the conference board at 10 o'clock. So that's it. We'll see how we go. Probably it's going to be, as I say, a relatively low volatile session today. Thanks very much, and we will keep on talking possibly over the next day or two. Remember, we do have core PCE on Friday to finish off the trading year. Thank you, guys.